Hello, this is Jordan. This video is being recorded on the early evening of Monday, April 29th, 2024. Thank you so much for tuning in. Hope you guys had a great weekend. In this video, I'm going to talk about why a massive bull market in the gold stocks is underway. I think this is timely considering we're only a month or so into a major breakout for gold, perhaps the biggest breakout in the last 50 years. Gold stocks are starting to perform well, and at the same time, there's a lot of scuttlebutt and voices on social media telling you not to buy miners to avoid gold stocks, and that's perfectly fine. That's okay. We're all entitled to our opinion. But in this video, I just want to give you the nuanced take and some information that can really cut through the BS and help you understand the gold mining sector. Now, this is not the be-all, end-all. It's just some insights from me that I think will help you as an investor moving forward. So let's get into the video. Okay, so these are just some various points about gold stocks that I've experienced, I've learned over the recent decades that I think can really help you moving forward. They'll help you be a better investor in this sector. They'll help your timing, and they'll help you better understand how the gold stocks actually perform. Okay, so number one, gold stocks are options on the gold price. They trade like options. So if we go back to 2006, you have the introduction of GLD, and later there were other gold ETFs that followed, silver ETFs as well. But so prior to 2006, if you wanted exposure to gold, you had to buy futures contracts. Now, for everybody else, that basically meant you buy gold stocks. So the performance of gold stocks, pre-2006, there's a lot of differences, but I should say today versus pre-2006. So the introduction of all these ETFs, that has rendered the gold stocks as options on the gold price. They trade like options. Okay, number two, the two best times to buy gold stocks, the two times when they are really going to outperform gold are following crash bottoms and huge rebounds. So think about 2008 following that bottom. You think about 2016 where the gold stocks were completely bombed out. And then also the COVID crash, 2020. So after those three periods, those were not breakouts. Gold stocks really outperformed gold for a little while. But the other one, which is pertinent to today, during or after a major breakout in gold. It's happened 7 times or so in the last 60 years. And so you get a major breakout in gold, gold stocks are going to outperform immediately after that happens. Okay, number three, you're talking about a very long period of time, 10 years, 15 years, 20 years. Yes, gold is probably going to outperform gold stocks. Look, the way you have to look at gold stocks, and this feeds into number four, most cyclical bulls in gold stocks last around 3 years. I mentioned this in another video. I think I may have written an article about it. So the way I look at, and the way I note when a bull actually starts and ends, cyclically, most of the 6 or 7, historically, they've been around 3 years. There might be some that are like 2.5. There might be 1 or 2 that are closer to 4. But we have to understand that during a cyclical bull in gold, even the 2018 to 2021, August 2018 to August 2020, even though there was a COVID crash in there, gold stocks from that bottom to the top outperformed gold. So you're looking at gold, there's a cyclical bull for most of these are 3 years. Gold stocks are going to outperform. They're going to outperform gold during that specific period. And going back to number three, this is why you have to think of gold stocks like they're like a 2 or 3 year trade. Maybe in some cases, you get to number five, like you look at 2001 to 2007, you had the 2004 to 5 bear market. I think it was only 45% or so, so you could have ridden that out in some cases. But the reality is, historically, and this is true even from 1957 to 1980 when gold stocks did very well, there were at least 2 65% declines in there. You had another one in 2008 in the middle of that 2001 to 2011 secular bull market in gold. So there is a history of gold stocks performing really, really well for 3 years, and then you get into a brutal bear market. So yes, the next 2 or 3 years, this is a real wealth building opportunity in precious metals, and the gold stocks could do fabulously well, but they're going to give back a huge chunk of those gains in the next cyclical bear market. This is really important to remember. This isn't just blowing smoke up here. Everything's not all positive with respect to this list. Okay, last one. So the best long-term indicator for gold stocks is gold against the CPI, the inflation-adjusted price of gold, because these are heavy, intensive industrial businesses. So inflation impacts the gold stocks. It impacts their margins, as we saw in the last 3.5 years. With the costs were going through the roof, and silver was way down, gold went sideways. So that is why, like, the real best long-term indicator for gold stocks, it's the inflation-adjusted gold price, more so than the nominal gold price. Now, the last thing I want to mention, getting back to number 4 and gold stocks outperforming gold during cyclical bulls, when we're looking at the ratio, so you have gold stocks divided by gold, that ratio will tend to peak around, could be like the middle or 2/3 point of that cyclical move. So most of the outperformance that you're going to get from the gold stocks relative to gold, like let's just say in a 3-year cyclical bull, like you're going to get most of that outperformance in the first year or two. Because once you get into the last third, the last year of that, that is when the gold stocks will perform, poorly relative to gold. Doesn't mean they're going to decline, but that last third of the cyclical move, that could be when gold outperforms the entire gold stock sector. A big reason is because you have inflation later on once these moves really get going. So I hope you like this list. Hope you find it informative. Hope it helps you. Now I'll just get into a few charts here that'll add to some of these points, add some historical examples. Okay, so here we have gold against the CPI, the inflation-adjusted gold price, and the Barron's Gold Mining Index here. The yellow, these are the secular bull markets in gold. And then we also have this August 2018 to August 2020 move. And the main point here is look at how similar the inflation-adjusted gold price chart looks to the Barron's Gold Mining Index, the gold stocks. I mean, look at the similarities here, especially in the last 15 years. I mean, I'm not going to say it's like perfectly similar, but you can see, and this is going to be a huge breakout later this year, when we see the inflation-adjusted gold price make a move like that, and that's when you're going to see the same thing in gold stocks. Okay, so last chart. This is a bit more detailed. Looking at, we have gold here. This is GDXJ divided by gold. This is GDXJ. Now this is the Huey divided by gold. These are the unhedged, larger gold stocks. GDXJ, of course, the larger juniors. Now this data back to 2004. This is official. It's on the MVIS website. MVIS is the parent of the GDXJ index. Now this here is data from my own Daily Gold index that I had years ago, basket of juniors. Okay, so yeah, there's a lot going on this chart, but think about it like this. These vertical lines here, these are the major breakouts in gold in the last 25 years. And so this yellow is highlighting GDXJ against gold. We can see, look here, after 2005, huge outperformance. After this breakout, you had this outperformance. Look, you had a crash bottom here, so that's why it outperformed. And then you even had a little bit here after the 2019 breakout. Same for the Huey. We can see, again, the yellow is the outperformance after the breakouts. And here, look where we are now. This is the major breakout in gold. This is GDXJ against gold. That has moved up. This is the Huey divided by gold. That is moving up. So what this shows you is gold stocks, you want to own them after a major breakout in gold. And we just had this beautiful 13-year cup and handle breakout, probably the biggest breakout in precious metals in the last 50 years. It's almost a perfect time for owning the gold stocks. But the other side of that is we could have this incredible bull market, this incredible cyclical bull market in the next 3 years or so. But after that, we could be looking at a 60% decline. So you can't buy and hold these things for 5 years. Like, you really can't. You have to think of them as like a 2 or 3 year type of investment. Now, finally, I'm not going to toot my own horn here, but I'm going to let somebody else do it for me. So it was one of my subscribers just tweeted something earlier today, And he's talking about get a subscription with someone who knows what they're doing, like Jordan. His equal weighted portfolio has outperformed GDXJ since the bottom over 2-1. Well, Nick, thank you so much for the free pub. And thank you so much for posting this chart. I'll have to ask you which stocks in particular you have on this chart. So the point of this is everything I said here, all this is very important. Yet at the same time, it's better to own a basket of your own 10 or 15 stocks. Like do that instead of owning GDX or GDXJ. And so if you're a good enough stock picker and you understand these companies, build your own GDXJ because it can outperform GDXJ, which is still going to do really well over the next couple of years. So head on over to TheDailyGold.com and consider subscribing to our premium newsletter. I would really appreciate it. Thank you so much for tuning into the video. Let me know what you think, and I'll talk to you guys again in the next video.